everybody, I am Rayner. You are listening to Inside the Coded Economy. Today we have Inside the Scoop on SBA funding. Today's episode is all about SBA lending, what it is, why it matters for new business owners, and what banks are looking for. We'll also break down the funding trends, resources, and the economic factors that are shaping the new business landscape. So today we have Kathryn, funding consultant, and Sara, Vrancik. I don't know if I said your name right.
Vrancik, yeah.
Vrancik. Okay. Director of Business Development, Katie and Sara. So happy that you guys are here. Katie started with Benetrends this year. She's got a degree in finance and real estate. And Sara's been with Benetrends for about 4 years now. Background in sales. I've actually been working with Sara for probably close to 3 years. Closed a lot of funding deals together. And Katie, for sure we got a few in the works. So love working with these two. And yeah, thanks for being here, you guys. If there's anything that you want to chime in on, any kind of background or anything that you think the listeners should know about you guys, feel free. What's your favorite color?
Yeah, we're super excited to be here.
Yes. And of course, appreciate the partnership between Benetrends and Painter Bros for the last 3 years. So you guys are a trailblazer in the painting world, especially in franchising. So excited to be here.
Awesome. Thanks. Appreciate that. With some good little tidbits. Just to kind of get started, a few questions. I mean, really, this is for those that are either starting a new business or they're existing owners. And a lot of times as businesses grow and open, right, funding's important. And a lot of folks have no idea the options that are out there. Now, of course, like we deal a lot with on the franchising side, right? So we get a lot of brand new business owners coming in. Also, like with us particularly, we do a lot of commercial work. We need a lot of, capital. So really this episode is to help folks understand, okay, well, where can I go? How can I get started? What are some challenges that I'm going to be up against? And what options do I actually have? Because I think most people just think they walk into a bank and they get a loan and that's all that they can do. To start it off, I guess, Katie, just let's keep it very simple, very upfront. What exactly is SBA lending?
Sure. Yeah. So SBA stands for the Small Business Administration. Essentially how it works is it's our government entity that allows banks to be incentivized to lend to business owners. That happens by the banks guaranteeing a portion of the loan. So there's lower risk involved for the banks. And again, that incentivizes them to lend to people who maybe couldn't get, traditional financing done, or again, are business owners looking to get financing.
So it's meant for is it newer business owners or new and existing or?
New and existing, yeah.
Okay. What's considered a small business owner?
Sarah,
do they have a certain threshold of funding or up to, $1 million or $10 million?
You can get an SBA loan for up to $5 million, but in terms of with the threshold for an SBA loan, I don't believe there's a certain criteria that they have to meet. I know that there is certain liquidity, obviously, and different qualifications that go into it. But in terms of the actual small side of the small business, what constitutes a small business, I don't think that there's a certain criteria. Sarah, you want to speak more to that?
Yeah, sure. So just as far as a threshold for the loan amount, you're usually looking for anything around $100,000 all the way up to $5 million. So small can be small. It could also look a lot bigger as well.
Many people know that you can go up to $5 million or, right. What is it really? How much can I actually get?
And something to note on that end too is that that's in all of your SBA loans. So a cumulative amount. It doesn't have to be just one. That's for $5 million. Yeah.
Okay. So they can get multiple.
Mm-hmm. Just the maximum amount for all of your SBA loans combined has to be the $5 million.
Okay. So what different types of loans are there?
Yeah. So it's funny out there. A lot of folks think there's a million versions of an SBA loan, but really if you go on the SBA.gov, there's really only two. So there's the SBA 7A, and this is the most commonly used SBA loan. It's very flexible, making it a great option when, equipment or working capital or even real estate is involved in the investment. So an SBA 7A typically requires anywhere from 10 to 20% down in cash as the borrower's cash injection. 10-year terms, typically with no prepayment penalty. And there are variable rates with the SBA 7A loan. The rate's tied to prime, and right now they're at about 9 to 10% max, and those are adjusted quarterly with prime. So if rates continue to go down, fingers crossed, everyone out there with an SBA loan will see that, but same goes for if rates are raised as well. Now, the SBA 7A, as I mentioned, can be used for working capital, equipment, renovations, build out, even business acquisitions. And it can even combine real estate, which is pretty important, because if someone does want to combine maybe commercial real estate all in one loan, this could give them a fixed interest rate. This could give them the option to extend those terms from 10 to maybe 25 years. So definitely the most common is the SBA 7A. There's also the SBA 504 loan. This is a long-term fixed rate financing option for up to $5 million on fixed major assets. So this cannot include working capital or inventory. This is existing buildings or land, new facilities, long-term equipment, things like that. And then, of course, the SBA Express loan or the micro loan, this is also very common as well, but this really falls under the 7A criteria. But a quick synopsis on the micro loans are the 150 and under, usually 10% down. Still the same 10-year terms, but these loans don't require collateral, which is pretty important for some of those folks who maybe don't have collateral, aka a primary residence, real estate, or an existing business. And in some cases, the microloans or the express loans can be quicker than a regular 7A because it's a smaller loan amount. In most cases, I say that carefully.
I mean, we've done a little bit of have we done like the micro loans before, the express loans, I feel, and then the 7A. I don't know if we've done any of the 504s. I don't think any of our people have qualified for that.
They're few and far between, but nonetheless, they are out there.
With the microloans, are those ones good for, like, if they're already in business and maybe they just need like a little bit extra capital, like they've got a bigger project coming up and maybe they just need a little bit of funding to complete?
Yep. Another term thrown around for these loans is the working capital loan. A lot of folks call this that because that's exactly what it can be used for. So, if you're 6 to 9 months in business or however long in business and you need some, an extra bump of working capital, this can work great for a lot of folks. However, one stringent requirement for the working capital loan is that business typically does need to be showing a profit. In order to qualify for that. So, case by case always, but totally and very commonly used for working capital situations.
Is there a timeline on like the profit? It does have to be within, you've been in business for a year, you've been in business for 2 to 3 years. Is there?
I'd say rule of thumb is generally, 6 months.
Do they need to submit anything for that? Like tax documents or just P&Ls or how does somebody get that type of loan?
Typically, we'll take past 2 years or most recent tax returns and profit and loss statements from the business, in addition to their own personal tax returns and proof of income, soft credit pull, things like that.
I feel like there's a lot of folks that would probably be interested in that one in particular. So it's good for them to know what's required. What makes the SBA loan such a good fit for, startups and smaller companies compared to traditional loans that are out there? Like why would somebody go SBA versus just going into the bank?
Honestly, I think it comes down to availability. A lot of banks don't want to lend to individuals, specifically for a business. There's, again, a lot of risk involved with it. So that's why, with the SBA, when they guarantee a portion of it, it just makes it much more accessible for a lot of business owners or entrepreneurs out there because, again, the banks are incentivized and they do want to lend because the SBA is guaranteeing a portion of it. So it kind of just comes down to the fact that they probably wouldn't be able to secure financing outside of an SBA loan.
I'll add to that too, if I may. Even though they might seem high, typically interest rates are lower on SBA loans rather than a conventional route. And typically the equity injection's lower. So if someone wants to go conventional, they might have to put 30% down. They might have rates, between 11 to 15%. So, with what Katie said, in addition to easier accessibility, I think, for sure.
What's determining the the rates, I feel like they've kind of stayed where they're at for the last couple years. I remember when I was first starting out, they were pretty darn low. And we had the elections, and then there's all these other things. So what's looking into a loan, like when would they maybe expect to see them going up or hopefully going down?
Unfortunately, none of us have a crystal ball, right? And you're exactly right, Bailey. I remember when like the total rate was like 7.25%. That's when prime was back around like 4.25%, 5%. We were all getting a discount during COVID. So as strange as it may sound, like national tragedies can cause a rate to, influx or drop. But for SBA specifically, that rate's always going to be tied to the prime rate. As we've seen, usually they're raised or dropped by like 1/4 or 1/2 percentage from quarter to quarter. It's, almost impossible that from one quarter to the next, that rate's going to raise or lower by 3 whole points. So in the course of 10 years, it's going to make a little bit of a difference. But in the grand scheme of things, from quarter to quarter, the influx or the drop doesn't make a huge difference on someone's monthly payment.
Are there any other types of loans out there? I mean, I know you talked about the 7A and the 504 and the microloans. Is there any other like loans or funding that they have access to outside of those?
Yeah, I can speak on this. It's like unsecured loans, or also called quick start loans, are out there as well. These are typically for individuals who may not qualify for an SBA loan, or they need their funds within 3 weeks. So it is a good alternative, but we always say that this is expensive money because the rates with this are pretty high, anywhere from 11 to 16%, but they are fixed, so that's an advantage. But there is a 9% bank closing cost fee associated with this as well. So again, more expensive, but if for the individual that may not qualify for SBA loans, either through liquidity or credit, or again, they need the funds quickly, this could be an option for them too.
Is there anything with folks that are leaving one business to start another business?
Absolutely. Yeah. So this actually isn't a loan. This is Rob's Rollover for Business Startup. So it was actually created by Benetrend's founder, Len Fisher, over 40 years ago. So yeah, he was the ERISA attorney who worked with the IRS to get the very first AMCO franchise up and funded. But essentially how it works is it uses pre-tax retirement funds to fund the business, interest-free, penalty-free, and tax-deferred. So it's pretty unique. But yeah, that is an option out there.
So is that a little bit different? Like some people try to borrow against their 401k, and then they're worried about the penalties and like, oh no, I can't do that. This is set up different than that, right?
Very different. Yeah. So actually how it works is they're going to create a C Corp for them, and we're going to roll over these funds, again, pre-tax retirement funds, into the C Corp retirement account. And then this retirement account will then purchase dollar for dollar share, typically in the C Corp. And then that money will go into the corporate checking account, and then it can then be used for any legitimate active business expense. So it's not borrowing. It's not just a straight withdrawal. It's actually a transfer. It's a qualified rollover.
Is there any kind of amount that they are limited to? Can they do like a portion of their 401k, or do they have to do the whole thing? Or
great question. Yeah, it can just be a portion. Typically for it to make sense, it has to be roughly a minimum of 50,000, but there is no maximum, and they can do multiple different accounts, or they can just do a portion of one. So they do have a lot more flexibility in this.
Okay. So it's not half or all. They could do like a quarter.
Yeah.
Okay.
Yeah, they could seriously just pick a number off the top of their head, like I only need this amount, and that's available to them. Yeah, this is their own money that they're using.
Are they able to do, let's say they did just a piece of it to start, are they able to go back in and move more later?
They can. So what will happen at that point is they'll need to do a new business evaluation because they'll have to find the valuation of the stock. So at the beginning, it's just dollar for dollar share, but that'll change right as the business is operated. So they can do that, but it's gonna have to have business valuation.
So would it be better for if they think maybe in the future, well, I might need more funds to just move it over and let it sit in the business account?
They can. Yeah, they can do that. I mean, honestly, to get it evaluated, we have partners that can do that for roughly $1,000. So it's not going to be, this massive chunk of change to get it reevaluated. But yeah, if you think that you're going to need it, definitely feel free to roll it over.
Just move it. Okay. I feel like you guys are probably seeing a lot more of the ROBs right now than the traditional SBA. Like, again, when the interest rates were lower, we saw the SBA like flying off the shelf when I first started. and then like we noticed the shift, and then it went into like the 401k and cash, and then people are like, so like what are you guys seeing right now trending?
Yeah, to be honest, Bailey, we're flying off the shelves with both. The past 4 months at Benetrends have been our top grossing 4 months in our 44 years of doing business.
That's insane.
So, and SBA too, we've only been doing SBA for about 25 of our 44 years, but record months these past 4 months. And yes, interest rates are going down, but a lot of folks are getting laid off from corporate America and exiting corporate America. And rather than trying to go back, or maybe they can't get back in corporate America, they're turning to business ownership. So even though, inflation and the economy might be crazy, people are opening businesses and these rates aren't seeming to stop them either. It's not just a Benetrends thing. I think like in general, people are just turning away from corporate America as they're getting laid off or they've paid their dues, etc.
I agree. Are you seeing any like particular layoffs in one industry than another?
Yes, definitely government layoffs, certainly in the tech industry. And then your other chunk of folks are just like fed up with corporate America, or nobody wants to admit it, but being subject to like ageism layoffs too. That's happening a lot with C-level clientele for sure.
Yeah, I see that a lot, on our side, in the franchising side. There was the big old tech boom, a few years back, which is actually like what I left what I was doing to work in software because it was good money. And during COVID, right, like that's what boomed was technology, because like we had to build tech for all like paperless options or, not in person. And then it's like it slowed down a bit. We all went back to in person, and now everybody's like, we don't need as much on the technology side.
That and AI too, I think, is just like coming in and swooping in. AI is great in some ways, but it's taking some other people's jobs,
Yeah.
Yeah, I'm totally building AI.
But not to
I'll talk about
right?
the positives of it.
Exactly.
In the service industry, it's a little different, right? Like we're not going to have robots painting walls. It reminds me of like the movie WALL-E. I don't know if you guys saw that. And there's like all the little robots rolling around, and there's one like that is glitching, and it's like rolling paint just like in random places. That's what I think of. I'm like, I think we're safe for a little bit. But I mean, I see that too we get a lot of franchisees that if their our average franchisee is 45 and older, based on like all those things that you talked about. We've had people that were laid off because they were too expensive for the company, which is like so terrible. And then we get a lot of the people from the tech industry that have come over, starting their own business. And so I see those trends too. So what other options are there out there, like with the SBA? I know one of our gals actually got an SB loan, she was like minority and women type of SB loan. Like what's out there for folks?
Yeah, and this is a very common question, so I'm glad you brought it up, Bailey. So the SBA does provide programs specifically designed for, to support minority-owned and women-owned businesses. However, they don't offer preferential advantages in the form of like lower rates or lower qualification standards or what have you, but they focus on, creating opportunities and providing resources tailored to these groups. So for example, access to targeted certifications and contracts. There's something called the 8A Business Development Program, and this program helps socially and economically disadvantaged business owners compete for government contracts. While not exclusive to minorities, or many minority-owned businesses qualify due to this eligibility. There's also the WOSB Federal Contracting Program. That acronym stands for Women-Owned Small Businesses. And this program ensures that a portion of federal contracting dollars are actually set aside for women-owned businesses and industries where they're underrepresented. And then as far as, other dedicated resource centers, there's the MBDA, Minority Business Development Agency. While it's not directly part of the SBA, it works in partnership with SBA to offer resources, training, financial assistance to those minority-owned businesses. And there's also women's business centers supported by the SBA. They provide training, mentorship, financial literacy. And we also encourage folks to go to their local chamber of commerce sometimes. Sometimes there's incentives and grants for both of those groups. So,
yeah.
Lots of
we do the same thing. And you do have to go on and get certified. So there's a process that you go through. We educate our franchise owners, but also probably a handful of the listeners would really appreciate understanding that whole process, especially in the service industry. We have a lot of the minority owned businesses. But yeah, you do have to go get certified. You do kind of get those extra options on the government projects that are out there.
Yeah.
There was one that we were looking at, I saw like a year or two ago. I think it was like 2 years ago. It was like a $4 million contract, and Zach was all excited. And he's like, oh man, if only I knew a woman in business. I'm like, I don't know. Yeah. So, but yeah, I mean, there's a lot of those, and like we teach our franchisees where to go to find those contracts. You do have to get certified, so that's one thing that I do try to let people know. Like you have to have proof in order to get access to those. I went onto the SBA site again, like when we were just doing a ton of loans with you guys, and there's a lot of resources on there. Like, I don't think people are taking advantage of, like I said, the education and classes and tools that they have, especially for like starting up their business. And it's a lot of really neat things. So hopefully people go on there.
Yeah. I was actually on there before this call, and like SBA.gov, there's a search bar in the top right. And you can search any keyword and it all pops up. Like, it's great.
What resources do you guys provide? Do you guys help them with, like setting up their business and like business management tools or anything like that? Like, what do you do?
Yes, this is a great, vast question. So depending on what type of funding option they're going through, whether it's the ROBS program or an SBA loan, first things first, we offer in-house incorporation services. So if they're opening up LLC, S Corp, C Corp, we can do all of those things. We can get them an EIN number, a DBA, doing business as. When it comes to the SBA side of things, we have some differentials from, maybe a SBA broker going straight to the lender. While we welcome folks to do that and exhaust all their options, the difference between working with someone like us or going straight to the bank or working with an SBA broker is not only can we match them up with the right lender who is familiar with their franchise, has the appetite for it, and wants more of them, we also help with all of the paperwork that comes with an SBA loan. And I'm not going to sugarcoat it. It's a lot. There's financial projections, cash flow statements, balance sheets, 30 to 40 page business plans. And you better believe these things need to be precise because banks get a ton of them on their desk every single day. And if it's not exactly how they want it, it's going to take even longer than it usually does. So we have some different tiers of support that offer taking care of financial projections, cash flow statements, custom tailoring the business plan from the ground up, and most importantly, doing it quickly and correctly the first try to ensure that they get the financing, because those items are really the meat and potatoes of the loan package and what sells their loan to the bank. So we can really take a lot of off their plate if they need that support.
I try and prepare everybody that I work with to be like, okay, look, the first 30 days is going to be with this group of people, and then they're going to ask for this information again. So don't get frustrated or freaked out if they ask for it again. And I try and help them understand why. Sometimes, we need the files and we need them quickly, and it's quicker to ask the people for them again. The other part of it is, did anything change? Did you miss something? I'm like, oh, okay. And I know there's been a few folks where they're like, oh, they just asked for this again. And I was like, yeah, your name's not on it. Like, it's easy things like that where I'm like, it's okay. Just double check everything. And this is why. So I think it's good. One of the things that I did in the very beginning was pretty sure I sat down with you guys, somebody from your team. I was like, lay it on me. Just tell me everything I need to know. And I feel like that's helped our franchisees over the years. And now I've got, another salesperson on board, and I'm trying to show him the Bailey ways. And the good thing about him is he will totally just like mimic what I do. So be prepared. Did you sit down with Mike yet, Katie, and like.
No, he hasn't scheduled anything yet. I sent him my link to my calendar, and we'll get something on the calendar. But I want to say, Bailey, if I could applaud you here, yes, I can say that you were extremely hands-on, even throughout the government shutdown. Like, you wanted to know the ins and the outs. You're like, I need to be able to tell this to other people and accurately. So I can applaud you for that and appreciate that aspect of you.
Yeah, because not every franchisor does that.
She's like, I need to get my hands on. I need to figure it out.
Oh my God, I will find out all the information that I need to find. It just makes it so much easier. And we just publicly called out Mike. So I will make sure that he sits down with you and learns everything that he needs to know. It just, yeah, like if you're sending people into the line of fire with here, go figure out how to collect, several $100,000s or millions of dollars to open up your business, I would like to be able to hold their hand along the way and, cuddle them when they're crying and freaking out. Just kidding. That's only happened a couple times. But
it's a very overwhelming process so that the hand holding that you can do on your end is huge.
It's a lot of information. And I mean, they're opening up a business, and while they're going through the process with you guys, they're going through the sales process with us. And then they're also doing their onboarding and setting up all their business and getting all the documents that they need. So I also tried to mimic our way, like, on the franchisor side, mimic our way of onboarding to match with how you guys gather information on the lending side. So it all matches up in the end. That way nobody's forgetting anything and there's no surprises. So I really did try to structure it out to benefit everybody.
Yep.
So if there's ever any changes that need to happen, just let me know. Is there anything unique on like the service industry side when they're getting an SBA loan or working with you guys, like anything different that you might see with them versus other businesses?
Yeah. So with SBA loans specifically, I would say that the service industry has quote unquote an advantage here, where if they're doing multiple territories, it can actually just be rolled into one massive SBA loan. Whereas if you're doing a brick and mortar concept, that's going to have to be individual SBA loans. So they are going to be able to have that advantage on that end, just to roll it all into one.
Interesting. So when we have folks that end up getting, like we've had people that they typically do multi-territories, and only a small handful do like get office spaces, but they don't have to build them out or anything. Does that have an effect on, like that wouldn't be building up the brick and mortar, that's just renting out a space, but you guys still need all that information.
Yep.
Okay.
It's information. Yep.
Okay. Yeah, I would say that's probably one of the different things with our particular company too, is we don't have an actual building that we have to build out like ever. So for the service brands that are out there, service companies that are out there, if they're looking into a loan, like, I mean, I would say like, just don't build an office, like save money.
Yeah.
It's not absolutely needed.
Yeah.
Yeah,
usually do that anyway.
We have a lot that is in the works and building, and I don't know, what I've noticed on the franchising side is franchisors, I don't know if they plan ahead for the growth that comes in. A lot of folks end up having to sell their business or sell parts of their business because they didn't financially prepare. And I think that's one of the things that Zach did really well, is that he just, I don't want to say instead of living the high life like his entire time, a lot of people are like, oh, all this money, and then they go buy boats and houses and like all these other things. He reinvested back into the business. And Painted Rose has been around for 12 years, and he just keeps reinvesting it and has instilled a lot of those things on, me as well as a partner. But now we're at like this next phase where we have 43 franchisees. We do a ton of commercial work. Franchisees need additional support, and we have to build out the systems to do so. And so instead of selling off a piece of the business and no longer having control of it, there's different options out there, for franchisors too. So
yes,
if I can add on a little bit to my own favorite, I feel like, and this is just more of like a general consensus, is when I hop on a call with somebody, and again, they're more educational, and people come into it with the misconception that they have to have all this liquidity in order to be able to fund the business. And I love it when we leave a call and there's like 3 or 4 different options that they have available to them. And they're like, I didn't honestly really even think that this was going to be an option for me. And then they're like, wait a minute, like this is very tangible now. So I love it when they leave feeling empowered and like ready to take the next step.
Yeah, that's always good. I mean, that's always a plus. And I think that's one of the reasons why I encourage the SBA lending so much to our brand new franchisees coming in, our candidates. I'm like, you guys have a lot of options, especially as a brand new business. This is the perfect time to get in and get an SBA. Like you can do a lot right now. And so I hear that a lot too. They're like, well, I don't have as much, I don't have this. I'm like, okay, well, let's go through what you do have and just talk to them and see what we can do. And I love that you guys, over the years, we've had a few folks that have come in and we've rallied together and figured out a way to make things work for them, and just, moving stuff around or working with them on repairing credit, or, just the educational factor versus just, oh, shoot, sorry, can't do it. Come back to us when you're ready. We really do exhaust all of our resources and options. And I don't think I've ever had anybody get turned away from you guys. Like,
honestly, it's never a one size fits all, right? So I feel like funding is always, it's strategic, and we can do a combination of several things. And a lot of people don't even think about retirement funds either when they're funding a business, because typically no one wants to pay up to 40% in taxes and penalties. So they don't even think about that or consider it. Yeah. And so, that's one of the things I love about Benetrends too, is that I feel like there's, again, no one size fits all, and let's figure out. And I feel like everybody rallies together, like from our finance side, our internal, like we try to figure it out. So I appreciate that about too.
Yeah, I was going to say, kind of like it piggybacks off of what Katie was saying, but that's what we encourage folks to do coming into the funding consultation, is to have an open mind, because you never know what options are out there. So, don't paint yourself into a corner. Even if you think you don't qualify, paint yourself into a corner. Have a good time. Even if you don't qualify, maybe there's something outside of Benetrends' capability that we can help you with. For example, we'll tell you all day long that a home equity line of credit or borrowing against your brokerage account through a portfolio loan is cheaper, faster, stronger, what have you. But like to your point, Bailey, we're not going to leave folks empty-handed. So.
Yep, I've always appreciated it. I've been on plenty of phone calls with people and walking them through the steps of just what to expect. It's been it's been good. And I think that I tend to lend a hand on helping ease the frustrations, because I get it. And so I can walk through it with them a little bit more plainly. It's like talking to me about technology. Like, I can't not talk in a weird code kind of way. I don't know how to simplify tech. So, but yeah, I know how to simplify like this SBA process in the banking, and I can relay that information. So I do tell like Steven and Zach sometimes, like, I need you guys to translate. I'm going to tell you what's wrong with the technology, and you have to translate it in human words, because it's not going to come out right.
Yeah, I think it's because when you know, it's hard to like dumb it down.
Yes.
That's fair.
That's my problem. If you can share one or two must-do steps for new business owners seeking funding.
Get an idea of your credit score, and don't ever be afraid to have the funding conversation too early. It's never too early to know what your options are and get an idea of what that credit score is, because we're gonna find it out what it is no matter what. So get an idea of where it is. If we need help, we can support you.
And along those lines too, I would say, in terms of funding, never too early to have the conversation, and then also figuring out where your total project cost might be. I know this might vary depending on concepts or territories that they move forward with, but getting a rough idea is going to be huge in terms of starting that funding conversation.
Final question, any words of encouragement for someone who feels overwhelmed by the process?
I would say that's totally normal. Again, this is a huge commitment, maybe one of the biggest in your life. And I think that if you weren't overwhelmed or feeling, unsure, I would say that you're in the wrong spot. So it's good that you're feeling this way. Biggest piece of advice is be surrounding yourself with professionals, mentors that have done this before, franchisors that can hold your hand and get a really good support system going for you.
Honestly, Katie, that was worded perfect. I was going to say, come to all of the conversations you have with an open mind, and rest assured knowing that you're pursuing a franchise system. You don't have to wear all of the hats. You don't have to be headquarters. You don't have to be marketing, HR, sales, all in one. That's why you're speaking with professionals like this. So totally normal and quite frankly would be strange if you weren't overwhelmed, but also, you are here with professionals and have that support. So enjoy the ride, even if it's overwhelming.
Awesome. All right. Well, thanks so much, you guys. Great insight on everything. So this next week, we're going to actually be talking with one of our local painting professionals, boots on the ground, day in, day out. So he can give us some insight and feedback on real life experience and what he sees just going on in the painting industry. So thanks everybody for listening. This is Inside the Coded Economy. Again, thank you, Sara and Katie, for joining.
Thanks for having us.